All right, good morning, ladies and gentlemen. Today is October 6th, 2021, and I am back with another edition of the Wednesday live show. And boy, there's been a lot of action in the market since last week. It's been kind of crazy, actually. As we speak, the S&P's down roughly 1% again. And man, I'll tell you, when we get to the charts here in a minute, the volatility has really picked up, and the market is exhibiting some pretty unusual behavior actually. And what I mean by that is that the ATR, the average true range, the 14-day ATR on the S&P is up to 1% now. Um, But actually a little bit over 1%. I have it on the bottom. You can't see it on this, but I have it on the bottom of my screen here. So, oh, there we go. See that ATR there? So well, that's a 30-day ATR. Yeah, the monthly ATR is up to over 1%. So, I'm sure the 14-day ATR is actually over that. But so anyway, what I mean by this crazy volatility recently here is just over the past week or so, we've been getting like these big down day, big up day, big down day, big up day, and then today's open, which the SPY actually shows a little bit better as far as the open, but look at today's open. So right, so we had that big down day, on Monday, that actually undercut the lows from pretty much when this sell-off kind of started. We had a little bit of a sell-off there, no big deal. But this gap down day, what day was that? That was on 9/20. That really sort of kicked off the pullback that we're in. And so as we speak right now, we're in pullback mode. The S&P's down just about 5%. This morning it was hovering like above and below 5% off the highs, but as of right now, we're firmly in a little bit over 5% down off the highs, which a dip is like 3 to 5%, and then pullback is 5 to 10% is what I typically refer to it as. A correction would be over 10%. It turns into a correction, but right now it's just a pullback from the highs. And I got a 50-day and a 100-day moving average. A lot of people have been using the 100-day moving average because that's the one that the market's sort of been waffling above and below here recently. 200-day moving average is a little further down here, so it'd be interesting to see if I need to put that on the chart too. But this 100-day moving average has only, let me keep going back here. There we go. There's the March 2000 pandemic lows, and just wanted to zoom out and get sort of a bigger picture here. So, once it came back off of those lows, and obviously it's just kept going at kind of an interesting sort of angle, almost unsustainable it would seem, but what you can notice here is that once it broke back above the 100-day moving average, there was only one small foray below it, which was relatively brief. Looks like there was a couple of closes, maybe 4 days that the market spent actually below, and then quite frankly, that was last October. We got a pretty good sell down, just sort of like what we're getting now, although shifted a little bit in time. But anyway, look at the beginning of November. I don't even remember what that was about, but the market sold off, and then all of a sudden, like right at the beginning of November, it just ripped higher, and then sort of started its big started the big rally up to, and hitting highs all along the way. But just kind of interesting. So kind of interesting to see that last October also had a pretty significant dip, but a lot of crazy stuff going on right now. So anyway, here we are, and we're kind of down. We're down probing the lows of this sell-off, which has been going on since the beginning of September. So, and I look around and I see, what is the sell-off being blamed on? Um, and there's a lot of things out there. There's just a lot going on. There's the debt ceiling thing, and the debt ceiling, and there's Biden's infrastructure plan, and all this sort of chaos in Washington around all that. And then, of course, the big boogeyman right now is inflation. And so I read on Reuters this morning that rising gas prices or rising oil prices are making everybody worry that inflation's going to become entrenched, right? And then that's going to force the Fed's hand to tighten monetary policy. And so that seems to be, but the funny thing is that all that didn't matter yesterday. And so, there's a narrative for the down days and there's a narrative for the up days, right? And these were, these two up days here were significant, right? Like the market would sell down, you'd have this real nasty day, and then the following day you get a huge rally that would lead everyone to believe that, okay, the worst of the sell-off's over, and then the following day. And so this is really sort of the volatility. I mean, the market moving up and down 1%, a couple of percent. We've seen some 2% days, right? So anyway, I think that probably the most insidious thing about this entire correction was this gap down day, this huge gap down day, and that sell down, which rebounded, and then the subsequent rally for about 3 or 4 days back up here, probably sucked in a lot of dip buyers, right, up to here, and then the market all of a sudden, rallied right back up to within spitting distance of the high. And I think a lot of people probably thought, well, that's it, because it rallied back all the way, basically back up to where the sell-off started, right? And you remember, like this particular day here, the big discussion, and I even thought I saw it in like Bloomberg or something, or Wall Street Journal, about the 50-day moving average. So, the S&P closed below it, and the SPY closed right on the 50-day moving average, but anyway, it's been pretty wild. And so, the big question is, these ranges are humongous too. Let me go back to the SPX here. Yeah, I mean, the ranges that we're seeing now are really significant. I mean, 50, 75 S&P points, just humongous, I'm gonna change this ATR just for the fun of it. The ATR, I'm gonna change this to a 14-day ATR just to see what it is. So the 14-day ATR, which you can't see on the screen because it's below it, is 54 points, right? So that means over the last 14 trading sessions, the S&P has moved on average 54 points, which is well over 1%. So now you got like this big, giant, humongous, choppy range here, and below 4,300, look out, and it's not really, if we rally up to 4,400, then it's kind of one of these environments where you think, once the market goes up, then it's going to go the opposite way, and once it goes down, then it's going to go the opposite way. So these type of trading ranges here are crazy, because the day-to-day gyrations, and the fact that it's gyrating in such a major range doesn't really lend much stability. Or Anyway, so let's move on. Look at the Qs. The Qs have had the NASDAQ 100. I guess I could do the comp here. Let's see. COMPQ is the NASDAQ composite. Yeah, NASDAQ composite and NASDAQ 100 look about the same. Firmly below the 100-day. Look at that. The high of the past 2 days was actually right at the underside of the 100-day. That's kind of interesting. So pretty big sell-off here. I believe that this is well over 5%. And so, yeah, it's looking a little dicey here. But then again, you can look at this chart and you can see, look at these humps. Like you got a hump now, right? And the sell down. There was a hump back here, pretty significant sell down. This sort of rounding hump right here, pretty significant sell down. And again, both of these times, there was a few days below the 100-day and then sort of snapped right back above it. So back up a little bit here. Yeah, it's interesting. There's some sort of spike highs, like these couple of spike highs last year, and then this year it's been more of a sort of like rounding humps when you get the sell-offs. But so far, nothing extremely out of the ordinary. Obviously, there's a ton of support on the Qs, like not too much further down, but anyway, it's been kind of wild. So take a real quick look at the Dow. Same sort of thing. Dow kind of rolling over here. All these indexes are looking pretty nasty. The more interesting one here is the Russell, which we talked about last week, and we've talked about a few times, the way that the Russell's just trapped in this big, gigantic range, and lo and behold, it's still kind of sitting like right in the middle of it, right? The Russell hasn't really broken down as badly as the other ones, which is kind of interesting, I suppose. But then again, it's just been a huge chop fest up and down for basically most of the year. It is kind of interesting though that it's sort of still right in the middle of this range rather than down at the lower end of it. So hey, who knows? But anyway, let's see, what else is there to talk about? Oh, well, I suppose the pending trades here, right? So I know the past, it's been about a month since we've had any open trades. Maybe not that long. It seems like it's been a while. So I mean, we had some open trades that did really good on like this sort of last leg here, and then we had a couple that had minor stop outs, but then we went for a period of time with like literally nothing pending. And then slowly but surely we've got a few pending stocks, but here's the thing is nothing has triggered in, and so fortunately we pretty much sidestepped this whole sell-off. Quite honestly, in the trading service, we've literally sidestepped the entire sell-off here by not getting sucked into any trades. None of the pending trades have triggered. During this little beginning of the sell-off, there was no pending trades at all. Nothing was just setting up. Everything was kind of rolling over, right? And of course, you guys know that obviously, what the indexes look like has nothing to do with what individual stocks look like, right? A lot of individual stocks have just been decimated and destroyed, and so it's a whole different picture. Typically the index pulls back 5%, your average stock gets hit for double digits. So but the point of it is that somehow or other we managed to sidestep the entire sell-off so far, and we didn't have any open trades that got hammered fortunately. And we have had a few pending trades, but they haven't triggered in yet. So figured maybe we'd take a quick look through those and see what they look like. We'll start at the bottom with AMD. AMD is still looking pretty good. I mean, it's still setting up, but it never triggered in. So AMD actually was the most interesting thing about it here. I think I have a chart that's actually marked. Here we go. So the most interesting thing about AMD is that it got added to the pending list back here, like prior to that little sort of fake out rally that I was talking about a few minutes ago that I think, sucked in a lot of people because the market sold off and you had the gap down and then that rally. And so the crazy thing, and I don't know, crazy, but it was quite the coincidence that this was the trigger line at the time. Like that was the level right there that AMD needed to close over to trigger in. And it just so happens on this big long range day here, it closed just under the trigger, so it didn't trigger in. And then, of course, the following day, you can see what happened. And so now it's trying to find support around 100 here. And so as this range kind of narrows out, and theoretically, this is going to look pretty good if there's not another big leg down. If it's able to consolidate here, the fact that the ranges are getting a little tighter. So, and I just drew this trend line a couple days ago, and basically, as it consolidates and gets closer to this trend line, a break of that trend line would be kind of bullish. So anyway, I would expect this to come down. I would expect that to come down, and you can see the actual trigger price. You might want to check that trigger price because they have moved a couple of times over the past couple of days. So anyway, AMD still honestly is setting up and looking pretty good. It's fortunate it didn't trigger in here because it'd be flirting with getting stopped out. So basically, it's been pending for the last couple of weeks, and it may take some more time, right? So look at this little consolidation over here in June. That's like right back here. Look at that. It basically spent like at least a couple of weeks just sort of consolidating in a real tight range, sideways range, and then it broke out and made a pretty substantial move. And so theoretically, if we saw something similar, like we see a tightening range here, and then break above that trend line, it's going to look pretty good. So sometimes you just got to be patient. I mean, I would much rather sit out the type of carnage that we've seen in a lot of stocks recently than be in there trying to be a hero. Especially with swing trading. I mean, the idea with swing trading, excuse me, as you know, and as we describe on the help on the website, is that we're trying to trade the market cycles. Like the market has cycles up and down, and right now we're still in a down cycle, obviously. And so when the cycle is swinging down, we don't want to try and just jump right in, every single, when the market zigs and zags, we don't want to try and jump in just because there was a good day. And because that doesn't mean that it's going to necessarily turn right back up. And so it's kind of like this. Market rallied back, or the stock rallied back up, but that didn't necessarily mean it was just going to keep on going right back to the highs. So we got a little bit lucky there that we didn't get triggered in on AMD. Next one up is JNJ, which is still in the midst of a relatively significant pullback. Although, well, let's see, this was the pandemic sell-off there, which obviously in a stock like this got kind of overdone. You can see how it snapped back. So it's not really, it's not as relevant as like some of these other sell-offs that you see. Interestingly enough, um, the behavior of J&J, the last couple of sell-offs here ended with sort of a what looks like a capitulation spike low, right? Like there's one or two price bars just sort of spiked down below all the action. And so anyway, this one is still this was also another one where the trigger was way up here initially. It's moved down a little bit now, but it was way up here. But this is and we've talked about this, prior shows a lot last year, where the trigger price, kind of starts off real far away from the current price action sometimes. And so this leg down here that J&J, by the way, that's the 200-day moving average. So, um, at some point, this could theoretically, this could drop off the pending list, right? It's had a pretty good sell down. If there's a whole nother leg down, then this theoretically would just drop off the list. But for now, it's still potentially setting up because it has these type of sell downs, gets extremely oversold. By the way, the RSI on this thing, let me pull that up here. Yeah, I have some indicators on my chart. Look at the RSI, extremely oversold. So it went from being extremely overbought, and this sell-off has brought it into extremely oversold territory. And that doesn't necessarily mean anything because obviously it's been selling down. It's extremely oversold, but it looks like there's some support a little bit lower. But if if it goes too much lower, I think it probably will drop off the pending list. So the bright side, the good news though, is this sell-off that we're seeing is actually it's setting up, quite a few stocks. Um, it's setting up quite a few stocks, and I think it's probably going to be like this earnings season is probably going to be what determines like the next big move. All right, well, let's keep going here. Last one. So right now there's still three. IRM. This is a beautiful little sort of. This is like I said last week, a really well behaved stock. And what I mean by well behaved is that the chart's not really extremely erratic like so many stocks are. Now there was, whatever this was back at the beginning of the year was kind of crazy, but other than that, you can see that it's sort of methodical. It trades really well in sort of well-defined ranges on a day-to-day basis. So anyway, this is still looking pretty good. It's had this nice sell down. It's having this little consolidation here, and that consolidation could go on for a while, but eventually, one of two things can happen. I mean, it could trade sideways for a long period of time, but eventually, if it starts to curve back up and cup up back towards these highs, well then we'll get triggered in, and the trigger price is a little over these prior highs from back here. And of course, hey, anything can happen. It could drop back down. It could be headed a lot lower. We don't know, but that's sort of the idea here. The only thing is that it's got a pretty low ATR, and so I mean, I suppose that's a good thing, but it works both ways. So with the low ATR, you could get a few days of a rally, like sort of back over here where you consolidate it, rallied up, and then it just sort of did nothing. There was that day, so we'll just have to see. But anyway, still a really good looking setup there, and so keep your eye on that. I don't have the trigger line drawn on here, but you can check the pending trades to see that. And again, those trigger the trigger prices do and can change occasionally. So I think on the previous two, we've seen a couple changes this week where they come down and get a little closer to the price. So anyway, this is still setting up, but things take time. This could easily sort of bounce around in a range, and then theoretically, if and when it starts to curl back up, well then we'll see it trigger in. And so some crazy price action so far this morning that I'm noticing, like SPY opened, rallied up, sold down, and now it's rallying back up again. So it was down 1%, now it's only down 0.5%. And so this is some crazy price action here, and there's just no telling. So it kind of feels like the market is setting up for a big rally back up sort of to the top of this range, or maybe a couple a day rally. I mean, that's sort of what it feels like here. I think this morning's open took a lot of people by surprise because yesterday was a big gap up and humongous rally. And the funny thing is on CNBC, they're like, every other day it's like worst day since, sometime in the past. And then the next day it's like best day since sometime in the past. And so we got 4 days in a row where we had huge intraday ranges and closes in the opposite direction. And so, I mean, here we are, this morning's low down here probing the lows going all the way back to July. So it's going to be interesting to see how this plays out. As you recall, on one of these charts, hang on a sec, maybe I still have it on in my list here. One of these charts, well, that's not it. Well, there's a weekly chart of the SPY for your viewing pleasure where I connected these two lows. That's a little ominous looking, to be honest with you. So that's a trend line break. The one I'm looking for is and that's a monthly. That's even more ominous looking. But I guess let's see. Yeah, basically what I had on the chart, I guess I didn't save it, was a real simple, watch this, real simple overhead resistance line. There we go. Yeah, close enough. So there you go. So that's basically what I had drawn on here last week, was an overhead resistance line. And so, the way that things work is you want to be a little cautious until the market's able to at least, break back above that. Right? So right now, the interesting thing about drawing uptrend and downtrend lines is, and you probably know this, is that what you end up with is quadrants, right? So right now, this is the quadrant where you want to err on the side of caution, simply because that's what this quadrant means. Break above this trend line and get back into this little quadrant here, things are looking a little bit better. So, and then of course, for the market to rally back up, there's a lot of overhead resistance, but the market does funny things. I mean, it sells off, and then everybody gets all bearish, and they think, this is it, this is the big one. And then when we get into November, actually seasonally speaking, September is the worst month of the year seasonally speaking. And interestingly enough, look at this September to October. I mean, big sell off. And so now we're into October, and there's always the idea that seasonally we're heading into a pretty positive time. But in the past, you guys have seen the market just sort of struggling and acting like it was going to fall apart, and then all of a sudden out of the blue you get 4 or 5 day rally that just blows the doors off of. And so that's always a possibility, but who knows. So anyways, that's about it. So keep your eye on the 3 pending trades we have, and we're just going to kind of ride this out. And I would err on the side of caution until the market's able to battle its way back up and get above that trend line, which you could probably draw a little bit better. There we go. I might actually save that just because that's a pretty good trend line across those highs. So anyway, keep an eye on that. So all right, well, not much else to talk about, quite honestly. Let's let the market do its zigging and its zagging and figure out what it wants to do. Never rule out the possibility that it's headed a lot lower. So there's you know humongous big sell-offs always start from small sell-offs, and so I think the weirdest thing right now is the fact that the S&P's like the typical year you get like I think it's like 14% pullback, and what we've seen here is 5%, 5% pullback, um, and so your typical year has a much more significant correction, which we haven't seen all year. And so, but then again, we know that the market is just being driven by a handful of stocks, and that makes everything a little suspect. But anyway, so I'll be back next week, same time.